Once again, we're back to extreme greed territory in the stock market. ARK Innovation is up 36.5% year to date. Massive, massive outperformance. It loves the retail investor stocks. Any retail investor stock, profitable, unprofitable, good company, terrible company, they're all up so much over the last few months. I'm personally seeing it. And retail investors in general have been doing really well over the last few months, including myself. I'm personally up 32% year to date versus 7% on the S&P, which I believe is a massive outperformance. But the biggest mistake retail investors make, and this is why I posted a video, for example, right before the March-April pullback, because I know how the cycle works. I know how the cycle looks like. I know how sentiment looks like because I'm on the internet, I'm on YouTube, I'm on social media. I know the sentiment of investors and how excited people are and how upset people are. I know when people are excited. I know when people were giving up back in April and calling me a pumper and all these kind of things. I know those things. I know how it looks like. I know when is the time to be fearful. I know when is the time to be greedy. And that's why I made the video back then. And I said, you're not a stock market genius. It got 18,000 views because back then, investing was easy. You just had to buy any retail stock. It went up. It was so easy. And people felt like geniuses. That's why it got 18,000 views for a small channel like mine. But right now, I'm personally seeing the same exact setup where we're at extreme greed. Retail investors are starting to get overconfident. For example, some investors I know, they're up like 15-20% year to date, but they're upset. They're beating the S&P. The S&P is at 7%, but some people are up 15%. It's double the S&P, but they're upset because some guy on X is up like 80%, and they're comparing themselves to the 80%, and they're upset. So to me, this mindset is really crazy. But this is the kind of FOMO that we have right now into the retail investor stock only. This is not an overall market. It's mostly into the retail investor stock, which is always a very interesting setup. Now, whenever I do those videos, investors always ask me, man, why do you do those things? Why don't you stick to analyzing stocks? You're much better at analyzing companies. Why do you do all those things? Why do you try to time the market? Well, this is something that Warren Buffett said. He said, be fearful when others are greedy and be greedy when others are fearful. Everyone loves being greedy when others are fearful. They love buying the dip. But whenever it comes to being fearful when others are greedy, it's called timing the market. This is how it is on YouTube. Anytime I talk about something like that, I get labeled as a market timer and I get labeled all these labels. That's how it tends to work, but most of my calls have worked out in this regard. But I'm going to talk about this market, let you know what I'm saying, and let you know what I'm doing about it. And I really hope you enjoy it as always. Now, if I look at this market, it's a little bit expensive, guys. I'm just being honest. I mean, numbers don't lie. We're trading at 22.3 times forward earnings, as high as we were in the 2021 peak, right before the 2022 stock market crash. But back then we had 0% interest rates. Now we have like 4.5% interest rates. So if we really priced in 0% or 1% rates, then a lot of optimism is priced in. And to me, the setup is very interesting. Now, if I look at other companies like NVIDIA, and again, guys, NVIDIA is an amazing company. And myself, in my videos, I said NVIDIA was a buy under $100. And I even said $97 was my fair value. And many of you guys bought NVIDIA under $100. And NVIDIA is an amazing company and is facing some tailwinds now to China. And I own AMD and I'm up a lot on AMD. And I love those stocks. But $4 trillion for NVIDIA is getting excessive. NVIDIA as $4 trillion is worth as much as Meta and Alphabet combined. It's worth more than Microsoft, which Microsoft is not cyclical. It has a recurring revenue business model. NVIDIA as $4 trillion is worth as much as Amazon, Walmart, and Costco combined. And it's much more valuable than Apple. So at $4 trillion, NVIDIA is getting a little bit excessive, I would say. I'm not saying the growth is not there. I'm not saying it's not a great company, but you could start seeing the overvaluation, not just in NVIDIA, but mainly into a lot of the retail stocks. Once you have the retail stocks, like the Cassie Wood kind of stocks, leading everything, you tend to have something bad happen after that. Most of the time, that's how it looks like. Those kind of stocks lead first, and then something bad tends to happen. It has happened so many times. Now, many investors are saying that this is, like 1998. Like if you look at this stock chart from someone I follow on X, a great guy, and he said that there's a 98% correlation to what has happened in like 1998, and then we're like in 1998, and then we go to like peak of 2000, and we go down, which means like we could crash in like late 2026 or early 2027. It's possible. I don't think that's going to happen, but it's possible. But based on what I'm seeing on my charts, and this is a good thing to look at, I'm seeing a potentially like a 2 to 4 year kind of cycle, like a bull run, which we've had 2 times before, and this is likely the third time. And normally you can see that based on some moving averages, which is called the golden cross. The golden cross is whenever the 50-day and the 200-day on the charts, they cross, mainly on the QQQ, which is the NASDAQ. They crossed after, which looks like this one actually looks like the March 2020 pullback and 2018. They crossed after 2020. We've had a crazy run after that, like 100% on QQQ up to 2021, and then we went down. Then we crossed again up from 2022 all the way to 2025, and now we crossed again. So anytime something like that happens, it's normally an indication that the worst is behind us and we are now in an uptrend. It doesn't mean that we're not going to have pullbacks, 5 to 10% pullbacks, or some kind of a small pullback. We're always going to have them. But it means that the worst is behind us and we're unlikely to have the same kind of pullback that we had before another like 2, 3, 4 years. So it means it's a time to be taking some risks, which is why I bought call options. Whenever we did the cross, I bought that robotics stock I have, which is up 40% in 2 weeks. And I bought a lot of the retail investor stocks. That's like the time to start buying those things. Although I believe now we're starting to get excessive. But what I believe will likely happen over the next few months is we're likely going to have a pullback, maybe 8 to 10%, but we're likely going to have some kind of a rotation because now we had a massive rotation into the ARC Innovation, Cassie Wood, retail investor stocks, which is why, again, your favorite stocks are going up. Webull is going up, and people are telling me, you said Webull is not a buy, and Webull is up 14%. Every single retail investor stock is up, guys. So it doesn't mean Webull is a great company if the stock is up. Maybe it is. We don't know yet. We're going to find out a few years from now. But right now, every single stock and their grandmother and their mother and their uncles and every stock is up. Retail investor stocks only. But stocks like Berkshire Hathaway, they're actually going down. Many stocks that were up a lot during February, March, April, they were hiding in those stocks. Now those stocks are going down and the money is going into a lot of risk assets, especially into ARC Innovation. And it's coming out of stocks. I can give you an example like Waste Connections. This is like a waste management company. It was up around 17% into the April sell-off as a lot of stocks were going down. Waste Connections was going up. But since then, Waste Connections is down 8% and the stock continues to go lower. And those are the kind of stocks I'm monitoring and I'm buying. I'm not buying Waste Connections. I think it's a little bit still expensive here, maybe around $160. But there's other kind of stocks that I'm looking at. So I believe we're likely going to have a rotation out of a lot of the NASDAQ stocks and ARC Innovation stocks into the recession-proof, boring stocks like Pepsi, Procter & Gamble, Waste Connection, all those stocks that you see at 52 weeks lows. If you pull up a screen or you look at 52 weeks low, it's all the great companies, Dow stocks, and recession-proof. No one wants them right now. I believe those stocks will likely pick up in a major way, and the money will balance itself out. So we might not actually go down on the S&P 500, but I believe the money will likely start going out of ARC Innovation and QQQ and all those names, and it will start going into the other names as the sell-off is overdone into Berkshire and many of those great companies that are trading at undervalued levels. So what I'm doing is I'm starting to buy a lot of those value investments, or you could say boring stocks that people don't really want. And I'm buying them because I believe if we do have a pullback, those stocks will likely go up, just like I showed you how Waste Connection has behaved. I believe those stocks will behave the same way. So they would hedge, for example, something like Robinhood for me which is up 250% in 3 months since I bought it in April. Another kind of stock, so that would help out. This is what I'm doing. Something else that I'm doing is I look at the VIX, the volatility index. We went as high as like 48 or 49, and now we're sitting at 16. 16 is dirt cheap on the VIX, and July normally is a bullish month. So based on seasonality, normally August, September, October, this is when the pullbacks tend to happen, and we tend to bottom in October. So I'm seeing a good setup, and I'm buying put options on the NASDAQ, on QQQ. So if we do have some kind of a pullback, this way I'm up 32%. Maybe if we keep going up, then I lose some percentage of gain, and then I lose on them. But if we go back down, then that's why I'm hedging my portfolio. But I'm buying volatility at dirt cheap levels, again at extreme greed territory. Whenever everyone is buying all the growth stocks and doing those things, which I believe there are some opportunities, but I believe we're overdone. We're massively overbought. The market is expensive, and a lot of good is priced in, which I'm not saying go all in cash. I'm not doing that, but I'm just starting to be fearful when others are greedy. I'm starting to protect some of the gains that I've made. And if you want to do the same thing, if you want to learn some doing put options and doing all the things that I talk about doing, and if you're up more than 20, 30, 40% on the year, and if you want to do those things, you could feel free to join my group. I share everything I do in real time. And this is the link if you're interested. But that's just my opinion on the market and what I'm seeing and what I'm doing. And if you want to do it yourself, you can find everything I talked about, Berkshire and all the boring stocks at 52-week lows and put options on the VIX and all these things. You could find all that stuff. But that's just my opinion, not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.